A payday loan is a short-term loan that can help you cover immediate cash needs until you get your next paycheck. These small-dollar, high-cost loans usually charge triple-digit annual percentage rates, and payments are typically due within 2 weeks or close to your next payday. Payday loans are not for the faint of heart. They can be difficult to repay and could end up costing you much more than you expected if you're not careful. Before you apply for one, it's important to know what you'll get and what's expected from you in return. Hey there, welcome to the Daytime Dollar, where we talk about financial strategies and how small changes can make big improvements. If you are new here, subscribe to my channel and hit the bell icon. Today, we are talking about how do payday loans work. So let's get into it. How do payday loans work? Payday loans function differently than personal and other consumer loans. Depending on where you live, you can get a payday loan online or through a physical branch with a payday lender. Different states have different laws surrounding payday loans, limiting how much you can borrow or how much the lender can charge in interest and fees. Some states prohibit payday loans altogether. Once you're approved for a payday loan, you may receive cash or a check, or have the money deposited into your bank account. You'll then need to pay back the loan in full plus the finance charge by its due date, which is typically within 14 days or by your next paycheck. Payday loans come with a finance charge, which is typically based on your loan amount. Because payday loans have such short repayment terms, these costs translate to a steep APR. According to the Consumer Federation of America, payday loan APRs are usually 400% or more. Despite the high costs, The Economist estimates that roughly 2.5 million American households take out payday loans each year. There are a few reasons for this popularity. One is that many people who resort to payday loans don't have other financing options. They may have poor credit or no income, which can prevent them from getting a personal loan with better terms. Another reason may be a lack of knowledge about or fear of alternatives. For example, some people may not be comfortable asking family members or friends for assistance. And while alternatives to payday loans exist, they're not always easy to find. Many people resort to payday loans because they're easy to get. In fact, in 2015, there were more payday lender stores in 36 states than McDonald's locations in all 50 states, according to the Consumer Financial Protection Bureau. How much can I borrow with a payday loan? The median payday loan is $350 on a 2-week term, according to the CFPB. But payday loans can range from $50 to $1,000, depending on your state's laws. Currently, 32 states allow payday lending with a capped maximum loan amount. Maine, Utah, Wisconsin, and Wyoming do not have a cap. Delaware, Idaho, and Illinois have the highest cap amount at $1,000, while California and Montana have the lowest at $300. Some states, including Nevada and New Mexico, also limit each payday loan to 25% of the borrower's monthly income. For the 32 states that do permit payday lending, the cost of the loan, fees, and the maximum loan amount is capped. Payday lenders have few requirements for approval. Most don't run a credit check or even require that the borrower has the means to repay the loan. All you typically need is identification, a bank account in relatively good standing, and a steady paycheck. What are the costs of a payday loan? The costs associated with payday loans are set by state laws, with fees ranging from $10 to $30 for every $100 borrowed. A 2-week payday loan usually costs $15 per $100. For example, let's say you borrow $100 for a 2-week payday loan and your lender is charging you a $15 fee for every $100 borrowed. That is a simple interest rate of 15%. But since you have to repay the loan in 2 weeks, that 15% finance charge equates to an APR of almost 400%, because the loan length is only 14 days. On a 2-week loan, that daily interest cost is $1.07. If the loan term were 1 year, you would multiply that out for a full year, and borrowing $100 would cost you $391. Your lender must disclose the APR before you agree to the loan. While it's typical to see an APR of 400% or higher, some payday loans have carried APRs as high as 1,900%. By comparison, APRs on credit cards typically range from 12% to 30%. How do payday loans affect my credit? Because payday lenders often don't run a credit check, applying for a payday loan doesn't affect your credit score or appear on your credit report. Also, payday loans won't show up on your credit report after you've accepted the loan. As a result, they don't help you improve your credit score. These can appear on your credit report if the loan becomes delinquent and the lender sells your account to a collection agency. Once a collection agency purchases the delinquent account, it has the option to report it as a collection account to the credit reporting bureaus, which could damage your credit score. Is a payday loan worth the risk? A payday loan can solve an urgent need for money in an emergency situation. However, because these loans usually have a high APR, if you can't pay it back on time, you could get caught in a vicious cycle of debt. It's important to consider all your options before approaching a payday lender. Know your options. Payday loans can provide borrowers with short-term cash when they need it, but they're not the only option available. If you need cash, make sure to consider all of your options before opting for one that could make your life more difficult. And if you have bad credit, be sure to check your credit score and report to determine which areas need your attention. In some cases, there could be erroneous information that could boost your credit score if removed. Whatever you do, consider ways you can improve your credit score so that you'll have better and more affordable borrowing options in the future. So guys, that's all about today's topic. See you soon in the next video. Goodbye.